The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, joining us now for a conversation about what's happening in this market trade as we near the holiday break in front of us. We are joined today by Brian Doherty, Senior Market Advisor at Total Farm Marketing. And Brian, great to have you back with us on the show here this week. And Merry Christmas and a Happy New Year to you and yours, Brian. It's largely kind of a mixed day as we're nearing that Christmas holiday, and it, for the most part, kind of just feels like that holiday malaise has settled into these markets, hasn't it?
It feels like that, and I've often wondered if that isn't overrated, and people say that, but boy, it sure has had that connotation here this week, Jesse, where things have just been kind of gliding down. Corn did pick up a little ground today, but didn't have that real strong punch into the close. While it did finish 2 3/4 higher in March at 472.5, range was rather small today, and we're hopeful maybe we see some short covering of consequence into the close, but that didn't seem to happen. It just seemed to drift. Same thing with beans, drifted lower, down anywhere 13, 14 cents, and then over in the wheat did hold up, but small gains, 3 to 5 cents in Chicago wheat.
As we look at these markets here, I want to start on soybeans because that's where we saw some of the biggest losses on the day, Thursday. As you look at the charts here, are you worried that we've put in some additional chart damage here in this kind of thin market environment, Brian?
I am. I've got what we call a head and shoulders formation on my charts. It's kind of obvious to everybody out there that the neckline was violated yesterday or today. So yesterday's low was kind of testing it. Maybe it violated, but today certainly went through that neckline. That's concerning to me. We're trading now at our lowest price since October. And yet we've had this weather uncertainty and growing concern of droughty conditions. But it seems like it does here in the U.S. too, it seems we continue to put in additional concerns for weather, only to keep having to push back and get some scatter rains. And maybe the markets have cried wolf one too many times here in dry weather, but it's not ideal in parts of South America, but it's a big country and a big region. And I think that heading into the Christmas holiday, at least, the market's a little bit more defensive, anticipating some of this rainfall will be beneficial.
That's a big thing I've been watching too, is that it largely feels like, especially in this soy complex, that traders, a lot of folks, if they've kind of gone to the sidelines here ahead of Christmas, they're going to be watching South America weather and just really waiting to see if these rains do in fact verify here through the end of the year. I think that's really the big catalyst in front of us here in terms of what this market direction could look like as we roll the calendar in 2024, Brian.
Yeah, and so that's where the tone sets. First of all, is what happens in Brazil and Argentina. So in Brazil, you got the weather concerns. Some private estimates are talking about the mid 150 million metric ton. USDA is in that 162, 163 area. 160 was just a little under 163, I think, last month. Lack of good, solid, what I'd call blanket coverage of rain has the bulls kind of scratching their head why the market's drifting a little bit here. It does look like that as you look at rain maps, and I mean, there's certainly some moisture, but continuing to be a bigger problem in regions, again, the Mato Grosso region in particular. And so it's interesting that that the market just has kind of taken this negative, let's call it tone, but it is the holidays. The bean, as you said, though, the bean chart has me concerned. And when I look at March soybeans closing today at 1301 3/4, Jesse, we're still well off the low from last spring of 1145. So if I'm holding on to beans, and a lot of them right now, I might be starting to give up, or at least have a little less grip on some of these beans, anticipating that the market is expecting big production out of the southern hemisphere as a whole.
I know weekly export sales numbers looked fairly okay. Everything looked like it was within pre-report estimate ranges on the grain side, and the livestock numbers looked okay too. Is there any notes that stood out to you in the weekly export sales, Brian?
Well, just the cumulative numbers. So when I say cumulative, the last week's numbers in soybeans really had a nice tone to it. I know it was expected, but 73.1 million bushels, that's a lot of bushels. Certainly behind last year quite a bit, 1.299 versus 1.555 last year. So about 255 million. Corn, on the other hand, just a sliver under 400 million bushels, um, uh, well ahead of last year. Last year's pace. So last year, 812. This year, 1109. Let me just double check my math there.
Hmm.
Um, yeah, 300 million bushels. So nice numbers in corn, good pace in corn. When you look at that differential, running roughly 40% ahead of last year at this time. So good numbers. But what we're not seeing is we're not seeing any like home runs in on the weekly numbers. And whether that's a function of just no urgency on the end user's part, or if that's a function of ample supplies that are available elsewhere in the world. So let's say China keeps taking some of its share from here and there, but I think just the reality we need to face is that we've got competition worldwide, more wheat out of Russia and Ukraine expected in the year ahead, more problematic supply issues with soybeans between Argentina and Brazil, as well as corn. So I don't want to be negative, Nelly, but I don't have a lot of positive ammunition right now.
On the corn market, I wonder if you're seeing anything in this market, whether it be on the charts or just anything else you're seeing here. Some folks have floated the idea to me that if any market could see somewhat of a Santa Claus rally, quote unquote, it might be this corn market, Brian. But I wonder, are you seeing anything that could indicate this corn market could move anywhere beyond just the choppiness we've seen here this week?
I'm not. I'm hopeful, and if the Bears are kind of trying to add a little bit here, but the Bulls are just kind of sleeping and ready to jump in and kind of run this thing back up. Uh, looking at the markets every day, you get kind of conditioned. You just expect that things are going to be sideways to lower, and that's the way they've been. Probably the thing that really sticks out for me is September corn futures went off the board about 462, and here you've got December corn futures even lower than that, 457-ish. And what does that mean for the back months? It just means that we continue to sort of see that conveyor belt move forward. Um, we've heard from lots and lots and lots and lots of different sources that farmer selling is this year been as light as ever, or at least in recent history as far as forward selling. There was a lot of reason for that. So there's a lot of farmers with a lot of inventory on hand. So the question is, are they going to bury their head in the sand and wait for something to drive the market higher? Time is not necessarily their friend in the long run. In the short term, maybe they can hold out. But I think there's also an opinion out there that the USDA may not be done raising yield on corn. That could show up in January. And that once we flip over into January, there'll be a lot of farmers who've deferred or want to defer sales into the new year. And so I'm just not seeing anything today that gets me too excited about, even though corn's a good value to end users, that the end user is going to say, I just better get it bought at all costs and I need to secure it. And even if I have to pay more, I'm going to get it done. I'm just not seeing that urgency, unfortunately.
And to that point too, it still seems to me like there's a decent amount of carry in this market, but again, not a lot of farmers taking advantage of that carry to some degree, Brian.
Not a lot of farmers. There's farmers selling, and that's part of what's keeping the market in check as well. That the end user is aggressively buying. So when the elevator as an example, when an elevator purchases corn, if you sell them, Jesse, 15,000 bushels, and for May delivery, or you sell the carry, They don't have a buyer lined up right away. They're going to be hedging that corn. So it adds, again, a little pressure in the marketplace. Um, and and if you're a buyer and end user out there, the market just is continuing to signal you don't have to get ahead of your skis here and buy too much too quick. Another way to interpret that is let the farmer store it. And we'll buy, but we'll let them store until we need it.
We are talking today with Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, a few more thoughts from you before we wrap up today's program. Livestock trade, cattle and hogs, largely to me, feel like Thursday's action was positioning ahead of the big reports Friday after the close. Interesting timing on those numbers because, whether you think something's baked into this market already or not, we got a 3-day weekend coming up after a cattle on feed and a quarterly hogs and pigs report in front of us. That's going to be quite interesting. Your thoughts on cattle first as we look at this dynamic in front of us right now.
Yeah, somewhat perplexing. If you think back a little bit to when cattle prices were marching higher and higher, and the stock market was, looking kind of lousy, and just not a lot of confidence maybe in that the interest rates would ease up, and all of a sudden you kind of fast forward to now, and it's looking like, well, like equities have been on fire. They did post a very big reversal yesterday, downward, but the cattle market has been stuck in or entrenched in this downtrend and real volatile, real jumpy. And so we anticipate it'll probably take some time, but a couple of things to note. One is we just haven't had any adverse weather at all in cattle producing countries. So typically in that kind of November, December, there's a day or two where what I'd call, it's called evaporation days, where just due to nasty weather conditions, we evaporate weight gain. There's no weight gain out there, and it's hard to move cattle. Haven't seen that. Two, although the stock market has rallied a lot, I think there's a lot of apprehension in the economy in general, and that seems to be sifting through, whether it's cheese demand or dairy product demand, whether it's beef supplies, and that's keeping the market somewhat volatile and edgy. I'd like to think that the bigger picture trend has some pretty good cash markets underneath and asking prices higher than the current trades, but I'll tell you, this cattle complex is a bit perplexing this year. Yeah, it might be that maybe I want to be a little friendlier to the market than it is showing right now, but we still think there's a really good chance that you'll probably see that 50% correction on April cattle, put those back into that 182 level. That's about a $10 rally. We're about $7 off the low, so we need to see that giddy up and go. But a lot of back and forth, which just tells me it's more of we talk about holiday trade is like this: up one day, down the next, volatile, but not going anywhere fast.
Well, speaking of not going anywhere fast, that's the hog market, I think, largely the last couple of months. And I'm not seeing much of anything with the estimates for this quarterly hogs and pigs report that could really jolt this market at all. Hogs have just been dismal, Brian. Any notes there that you can think of?
Yeah, well, as I analyze and we analyze, and then you look at or talk to some producers. So we don't have the ready flow producers like corn, whereas there's lots of producers because just the nature of the industry. But in talking to the hog producers, they've been pretty kind of down and out for a while. They're working in the red mostly. They just push the envelope too far in production without pullbacks. Call it efficiency, call it what you want, call it a demand market that hasn't picked it up. So there's still on a daily basis, if you watch the daily slaughter numbers, and we'll probably see confirmation of this here on the quarterly hogs and pigs report, but we're still seeing just what I call just a few more hogs than the market seems to need. And that has been the struggle. Why the front month is as weak as it is. Now, what I would try to tell a hog producer, though, is don't lose sight of the premium that the back months that you get $93 July and August hogs. That's good premium. Historically, that's a good price. It's not as good as those contracts have been, but they haven't been a whole lot higher. The best we've ever mustered lately is about just a little bit under 97. So keep an eye on those back months.
Brian, any notes in the dairy parlor for us here before we run out of time today?
Just a very sluggish, very weak demand market. Cheese continues to erode. If you take a look where cheese prices are, you can try to extrapolate out what that could mean for milk. Cheese prices are priced that if you take the value of cheese and I take the blocks and barrels, add them together, divided by 2, and then times it by 10, that's in theory what we probably should see for milk futures. And you've got both at about $1.39 right now. So that means about $14 milk, $13.90, $14 milk. The board in January is $15.46, and in March milk at $15.54. Not good prices, but still above where the cheese index is showing. So, there's just no sign that the cheese market has found its low here. Unfortunately, butter's been on a big decline. Spot whey prices have been on the kind of the one area that's been supportive, but here in the last week or two, also weighing or sifting to the sidelines, starting to drop lower. So we just got to get these products turned around. It's hard to believe that with such a big sell-off that's not going to work its way into the pipeline. But remember, retailers are slow to bring prices down. So it'll get there, but it's not there yet.
Brian, we do appreciate your time here greatly each and every week on Market Talk throughout the year. And no doubt look forward to more conversations in 2024. Before we let you go, anything final you'd want to share here today?
If I'm a bean producer, just be very watchful of this market. I would stick to strategy. I would sell cash. We've been talking about this for months. Sell cash, buy a call or a bull call spread, quantify your risk, stay in the game. I'm just leery of the market. That looks like a market that, if it breaks, might have another 50 cents to a dollar down pretty quick. So I think I'll end on that somewhat sobering note, as well as just want to thank you for the opportunity to be part of this, and wish you and your audience a very Merry Christmas and Happy New Year.
Well, thank you. And same to you. Merry Christmas. Happy New Year. I know folks can reach out 800-334-9779 or go online, totalfarmmarketing.com. Brian Doherty, thanks as always for the time, and Merry Christmas again. We will talk to you soon.
Merry Christmas. Thank you, sir.